We are now joined for more on this by economist Lesiba Mothata via Skype. Lesiba, thank you so much for joining us. Now, was the Friday downgrade expected?
The Friday downgrade was expected. What was not expected, however, is the negative outlook that accompanied the view. In it, it shows that a rating agency that one would argue always had a more sanguine view about South Africa. They're very quantitative in their approach, don't listen to the noise much, and they look at the numbers, and they came with a negative review. That, I think, is telling.
Now, could it have been avoided, Lesiba?
At the rate that things are going, really, this was in the bag. And I'm afraid going forward, there could be more on the horizon. There are just a few things that are not happening. One, there is no response from the National Treasury as yet. I appreciate there was something planned for today. One would have seen some detail coming up. Hopefully that will still arrive in the future. But where we sit now, there really isn't something that has been done from that end. It leaves one wondering, what will happen now? We're in a recession. All three now have come with a view. What are we doing about it as SA?
Now, Lesiba, do we need to make some interventions to cushion this downgrade? And the fact that the recession is basically gripping South Africa's economy, what needs to be done to ensure that we get ourselves out of the situation?
Well, you see, there are global forces assisting South Africa right now. So we need to make sure that we position ourselves to take advantage of that. That's the first thing to do, without which these global forces would have been in a worse outcome. The second thing that needs to happen is to concede or appreciate that the cheapest form to stimulate the economy out of recession, out of junk, is to provide confidence. It doesn't leave anyone feeling all happy or confident to invest when the details that are coming out of state-owned enterprises and seemingly that which is coming out of the National Treasury leaves one wondering where we're going. And what needs to happen is detail and transparency and clarity of where things are. That's why the Commission of Inquiry could help in that front, to just give South Africans details of where we're going. Right now, every single day, confidence is weakened by that which we see come out.
Lesiba, you mentioned global forces that are assisting South Africa. Can you mention just a few of them?
So the commodities markets are still on the upward trajectory, supported by a growing China, which now is our major trading partner. The euro area, including countries like Spain, Italy, those in the periphery, are doing better. In fact, they're sitting on a cyclical recovery that's more sustainable. Admittedly, the US is not growing as Trump would have had it, at 3.5% GDP, but needless to say, it's still growing, and we may see them hiking interest rates there. All these regions tell us that South Africa, which is small and open, is benefiting from those positive tides.
Now, Moody's is the only major ratings agency to retain South Africa's investment grade status. What does this position mean going forward?
Well, it means we're really now on the cusp from all rating agencies to have 90% of debt issued in rands, that which matters the most, to be non-investment grade. The next decision that comes from either Standard & Poor's or that from Moody's, if it is a downgrade, it means now we're in a proper junk. When we need to appreciate that where we are now, this is not quite a proper junk, in that it's only 10% of foreign debt that's in junk. So if that were to arrive, could arrive by December, when that happens, a few things could begin to move, including capital flows, confidence weaken further, and we've seen that countries can get into deep recessions under such scenario.
Now, Lesiba, we've seen the rand firming against the US dollar and government bonds also firm despite the downgrade. What helped the currency?
See, it's these global ties that we're seeing. They're really quite helpful because in it includes a lust, a lust from investors for higher yield. Developed worlds are offering very low yields, even negative. And what's happening now is that there's such a demand for emerging market debt, which helps South Africa. That's on the one side. But another thing to consider is that South Africa, I think, has been seen as a fallen angel by foreigners, meaning that it has the ability to take itself out of this rut because it is indeed self-induced. So when you are seen as a fallen angel, there normally is disagreements about where prices should be, but that can help a country like South Africa because we still have institutions that work. In fact, the fundamentals are still strong. It helps in that way. So it is a pity that if SA were to not take advantage of it being seen as a fallen angel, for it is seen as such.
Now, Lesiba, another possible downgrade, is this a possibility, or can we get ourselves out of this difficult situation before any of the ratings agencies decide on the economy going forward?
I think we can. The market has given us that so-called olive branch, one could say that. But it requires tough decisions. It requires a sitting together of business, labor, and the state to make tough decisions, including not only just to introduce good governance in state-owned enterprises, but to make them profitable. That may mean scaling down the ownership of government in it to infuse it with private capital. That's one thing that can be done easily, and I think if that were to be done, because that's the biggest gripe that rating agencies have towards SA. Those guarantees could be as high as 10% of GDP within the next 3 years, and that is problematic. If we just sort that out, we can actually turn this thing around.
Lesiba, thank you so much for joining us. We'll have to leave it there for now. That was economist Lesiba Mothata joining us via Skype.